Good morning, students. Today, our topic is Introduction to Accounting. As we all people are knowing that the accounting is a very important function of commerce. Without accounting, nobody can know about the rewards of their hard work. How much profit a businessman have earned during an accounting year, or how much loss has incurred is to be known only and only by the work of or by the process of accounting. So today our topic is Introduction to Accounting and its meaning, functions, meanings and functions. So as we all are knowing that each and every person who's earning their livelihood by doing sole proprietorship or self-employment or by setting up a big organization. Each and every person wants to know their profit and loss during an accounting period. And as we know that accounting is not a very new, is a process which has been adopted in different forms in different times. So in ancient times, we were using also to calculate our financial matter. How much revenue has been earned and how much expenditure has been incurred and whatever the net income and net profit only and only we can know by doing the process of accounting. Okay, so now it is very clear. The accounting is not a new term. Accounting is the term very old that has come from the ancient times. So different economist, different scholar has developed their own methods of keeping the record of all the transactions in a particular set of books of account, and they have adopted different methods also. So there are so many methods. Some has adopted single entry system, some has adopted double entry system, and one method is also is there Indian accounting system. But now we have not to study as per our syllabus. Only we have to study double entry system and single entry system. So the double entry system has been propounded by the Lucas Pacioli. He was also known as the father of double entry system, and this is a very scientific method of maintaining the books of account. And other one is single entry system that are to be adopted by a small trader who does not know actual way of the accounting process, how to maintain the books of account. So now, students, we have to study today actual what is the meaning of accounting and what are its functions. So, one by one, we are going to study. So now, see on your screen. So now you can see here the meaning of accounting. So it is saying here accounting, meaning of accounting. So accounting is the process. Accounting is the process. You can read. So accounting is the process of identifying, measuring, recording, and communicating the required information relating to economic events of an organization to the interested users of such information. This means it is saying that the accounting is what? Accounting is first of all to identify the transactions which has been conducted to outsider, and then measuring it in terms of money. Only those transactions can be recorded in the books of account that can be quantified in the terms money. And then after identifying and measuring in terms of money, then we record the transaction in books of account and a set of books. Now, after recording this, then we communicate, means communicating the required information relating to the economic events of an organization to the interested users of such information, of such information. And now we can say that accounting plays an important role in providing quantitative information preliminarily, primarily financial in nature. So what kind of information is supplied? So it plays an important role in providing quantitative information and primarily which are at least of financial character about economic entities means a particular business organizations which having the financial transaction is to be recorded, that is intended to be useful in making economic decisions. Okay, now there are so many definitions given by American Accounting Association, that is AAA, triple A, in the year of 1966. This association is saying that accounting is the process of identifying, measuring, and communicating economic informations to the permit informed judgment and decisions by users of the information. And now one more definition is given by Accounting Principles Board of USA, AICPA. It is saying that accounting is a service activity. Accounting is what? Accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. So got it? And now after doing a study about the accounting is what? Accounting is the process of identifying, recording, and identifying, measuring, recording, and communicating the business events which are at least of financial character and interpreting the result there. So on this basis, functions of accounting. So now we have to study right now functions of accounting. So functions of accounting includes 5 steps. It is saying first we do identify. It means the first or very first step is in accounting is to determine what to record, that is to identify. What to record means what? All those transactions which are at least of financial character, means the financial events which are to be recorded in the books of account. It involves observing all business activities and selecting those events or transactions which can be considered as financial transactions. So now it is very clear that particular accounting, first they have to identify the business events or transaction which can be quantified in terms of money, then only it is to be recorded. The first process is to identify what to do record and what not to do record. Okay, so the second step is measurement. First, we have to identify the measuring it. In accounting, we record only those transactions which can be measured in terms of money or which are of financial nature. If transactions or events cannot be measured in monetary terms, it is not considered for recording in financial accounts. So now got it? Those transactions which cannot be quantified in terms of money cannot be recorded in the books of account. So now there are few events directly or indirectly make effect on the working of the business firm, but cannot be recorded in the books of account because they cannot be measured in terms of money. For example, see, the appointment of a new managing director, signing of contracts, strikes, death of an employee, etc., are not shown in the books of account. Even they affect our profitability, but we cannot measure in terms of money these activity. So these all are not to be recorded in the books of account, but only those transactions would be recorded in the books of account which can be quantified in terms of money, just like purchase of goods, sale of goods, payment of salary to the employee, payment of rent to the landlord. Okay, so this kind of transaction will be recorded, and those transactions which are not measurable in terms of money are not to be recorded. So now it's very simple. Now, third step is what? Recording. So first we had identified, then we had measured. So now third step is recording. So recording is what here? So a transaction will be recorded in the books of accounts only if it is considered as an economic event. So only those transactions to be recorded in the books of account which are to be considered as an economic event and can be measured in terms of money, which already we had studied in previous two steps. So now once the economic events are identified, once the economic events are identified and measured in financial terms, then these are recorded in the books of account in monetary terms and in a chronological order. Chronological order means here date wise, sequence wise, which transaction has been done first, it is to be recorded accordingly. So recording should be done in a systematic manner so that the information can be made available when required. So now next step is what? After recording the transaction in a very first book that is known as journal or journal proper, then after we have to classify. The next accounting process is classifying. Is very important. By classifying we can know the balance of each and every individual accounts, and we will be in a situation or in a position to explain about a particular account or transaction, how much amount we have to pay or we have to receive, or how much balance of a particular item is in hand, how much cash is in hand, and how much cash at bank has been deposited at a particular date. So all these things we can know properly by the classifying. So once the financial transaction are recorded in journal or subsidiary book, all the financial transactions are classified by grouping the transactions of one nature at one place in a separate account. This is known as preparation of ledger. So classification or classifying is also known as ledger. So this means under classification, we group the transaction of one nature at one place in a separate account, in a separate heading. For example, if we have purchased goods from different suppliers, but we record all the purchase at one place, all the purchase of goods at one place, so that we can say at a particular point of time how much total purchase we have done or we have made in the particular month or year, and how much we have purchased cash, how much we have purchased credit, everything we can tell about this by classifying the transactions. Next, summarizing. So, with the help of classifying, we summarize the data. Summarizing here includes preparation of trial balance, then preparation of trading account, profit and loss account, and balance sheet. So now summarizing is what? It is concerned with the presentation of data, and it begins with the balance of ledger accounts. It begins with the balance of ledger accounts and preparation of trial balance. Trial balance is what? So the trial balance is the list of balances of all accounts which has been come out from the ledger. And now trial balance is required. Trial balance is very important. Trial balance is required to prepare the financial statement. Financial statement is the end result of every business. Every businessman wants to know their net profit or net loss, and this can be done only by preparation of financial statement. And financial statement can be prepared with the help of trial balance. So financial statement includes trading account, profit and loss account, and balance sheet. Okay, so trading account is what? Trading account shows about purchase and sale and how much total profit the company or firm has earned. This is known as gross profit, and then gross profit is to be transferred to profit and loss account to find out the net profit has been earned by the firm. And then balance sheet having two sides. Left hand side having the liabilities, means how much amount we have to pay to outsider and to the owner in the form of capital, and in second one side is asset side, which shows how much fixed assets, current asset at a particular point of time. And now the last step is communication. So communication is what? It is very important because the result of the financial statement is to be communicated to the decision making body or end user. The main purpose of the accounting is to communicate the financial information to the users who analyze them, as per the individual requirements, and providing financial information to its users is the regular process. So means what? After doing all the accounting process, at last all the result we have to supply to the decision making body who will analyze and interpret the result and provide the useful information to its users on the regular basis. So now got it? Next point is objectives of accounting. So, what is the main objective of accounting? So, as we know that the accounting is a very important, it plays a very important role to know the profit and loss of a business, to maintain the systematic record of business. So, now on this basis, we can say objectives of accounting is first, the main objective of accounting is to keep systematic record of business transactions. That is why all financial transactions are first recorded in journal and then posted into ledger. Second objective is what? Accounting is helpful. Accounting is helpful in preventing and detecting the errors and frauds. So if we are maintaining a systematic record of all the business economic transactions, it helps us in preventing and detecting the errors and frauds. So now third objective is accounting plays important role in calculating the profit or loss during a particular period by preparing trading account and profit and loss account. Got it? So accounting plays a very important role in calculating the profit or loss during a particular period by preparing trading account and profit and loss account. Got it? Next objective is what? So next objective is saying that accounting is helpful in ascertaining the financial position of business. Financial position of business. What is the financial position? Financial position says that how much liability the firm having at a particular point of time. Liability means the amount which are repayable to outsider and how much assets the firm having at a particular point of time. Asset includes two types of assets, current assets and non-current assets. Current assets refers to those assets which can be sold off or can be realized into cash within a year's time, and non-current asset refers to those assets which we use in our business for this over a number of period of time for the smooth running of our business. For example, building, machine, motor vehicle, these are non-current assets which are to be used by the same firm again and again. And last one is saying here, accounting provides useful information to its users. So now got it? So student, today this is sufficient to understand what are the meanings of accounting and of functions and objectives. So tomorrow we will study about the next point, bookkeeping. Okay. Now fine. Is any doubt? The student, any doubt? So now we have to recapitulate what we had studied under the heading of Introduction to Account, meaning. So, meaning is what? The accounting is the process of identifying, measuring, recording, classifying, summarizing, and communicating the result to the end user to interpret of the financial report so that they can take a better decision. They can supply the useful information to its stakeholder or users. Okay, now next point is what are the functions of accounting? So on the basis of definition, we can say that accounting function includes five steps. First one is we do identify. We do identify what? Identify the business transaction, what is to be recorded or what is not to be recorded. But how we do identify? So to identify on the basis of business events and transaction which can be quantified in terms of money. Okay, so first of all, we do identify. Second step is what? After identifying, second step is measuring. Measuring means what? We measure all or we record with all those transactions which can be measured in terms of money. Measuring means here to measure the quantification or quantify it in terms of money. Only those transactions are to be eligible to record in the books of account which can be measured in terms of money. So first we do identify, then measure it on the basis of financial, then we record in the books of account. So first step of recording will start after measuring. When we do measure if this transaction has been quantified in terms of money, then it should be recorded only in the books of account. The very first recording in the books of account is known as journal, is known as journal or journal proper. So we do record the transaction in the books of account. It is known as journal, and it is to be recorded on the basis of chronological order. Chronological order means date wise. Date wise we do record it. Okay. After recording, then first we have record all the transaction at in the book, then we separate each transaction having a similar nature. Means we do group among the whole transactions which are of similar nature under one heading at one place. This is known as classification. For example, suppose that in your neighborhood a general store is there, and in your colony all the people are known to properly to the general store uh, keeper, and suppose that your parent is out of the station and you need some stationery item or general stores item, suppose that toothpaste, oil, whatever. Now you go to the shop and you say to the shopkeeper, please give me this toothpaste and this biscuit oil, whatever. But my father is not at home, so give me when father will come, then I'll pay you. So what the shopkeeper do then on this? Shopkeeper takes out a register, okay, and on the first page he maintain all his customers name with the index number. Suppose that your father name is Mr. A. So he will open, suppose that Mr. A's name is written on page number 20. So he will open page number 20. At the heading of Mr. A, he will write on the particular day you have purchased on this and this things on credit. So he will record at one place. Okay. And when you make payment, he will write only on that sheet, page number 20. Then he can find out easily at page number 20 from particular person how much amount we have to receive and whatever amount he have paid. So this means first he will record all the transaction at a single book. But from there he will maintain a separate pages or separate book for each and every individual. So this is known as classification. Okay. But in a separate book, he will record all the sales. Mr. X को सेल किया, Mr. Y को सेल किया, Mr. Z को सेल किया, सब लिखेगा. बट किसको उधार जितना बेचा है उसके लिए उसके नाम से एक अलग बुक मेंटेन करेगा, जिससे कि हमें सिर्फ उस पर्सन के बारे में सारी जानकारी मिल सके. इसे कहते हैं क्लासिफिकेशन. Then after we do summarize. To summarize includes trial balance, trading account, profit and loss account, and balance sheet. First we do trial balance. So how to maintain trial balance? So from the classification, under classification we prepare a ledger. By preparing ledger, we can find the balance at the end of the month or at the end of the year. How much balance has been come out at the end of the month. Suppose that I had given you example. Suppose that Mr. A is your father and you have purchased goods of rupees 1000 from him and you have paid rupees 600 only. Suppose that how much balance would be there? 400. So this balance would become from preparation of ledger. So these balance are to be put in the particular list of particular format as per the debit and credit. There are two types of balance. One is debit balance, second one is credit. I will discuss it later on. What kind of balance is called debit and what kind of balance is to be called credit. Okay. So debit balance is to be put in debit side and credit balance is to be put in credit side. And at the last, total of debit must be equal to total of credit. If it is tally debit and credit, this means our transaction is correct and we have maintained proper books of account. Then with the help of trial balance, we to prepare the financial statement to know the profit or loss of the business, which are required by each and every businessman. Then with the help of trial balance, we to prepare trading account, then profit and loss account, sorry, then balance sheet. So these are summarization. So after summarizing, we do communicate the result of financial report to whom? To the decision making body who will take an decision on that result. First, he will do interpret and analysis the result why this net profit has been come and why the what are the percentage of the net profit, how much amount we have to pay to outsider, how much amount we have to pay from, how much depreciation we have charged this year, what kind of asset we need to purchase, everything he will know from the financial report. Then he will take decision, and after filtering the result, whatever the information is required to its stakeholder, he will supply it or publish the book of account or financial report to the outsider who are the stakeholder of the company. So these are the functions of accounting. Okay, those students. So now I will share this PDF file to you, and you will do study at home properly. Okay. Now goodbye.